Fears of a major escalation in the conflict in Gaza, with political leaders calling on Israel to stop attacking health facilities. Last week's interest rate hike doesn't deter weekend bidders at auctions, and the global wellness sector is now worth $5.6 billion US. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Monday, the 13th of November, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael, and welcome back. Day one. How was your break? You were in Fiji, weren't you?
It was, fantastic. Thank you, Sean. I had a week and a half off first to finish writing my second book, and then a week and a half in Fiji, and it was glorious. I mean, that is a spectacular place, isn't it? The beaches,
it sure is,
and the weather, and the cocktails, and the snorkeling, and the people. It's just fantastic. I mean, you can hear that I'm so pleased to be back.
Yeah, absolutely. And we missed you. Adam did a great job, though, I've got to say. Adam Lang filled in for Michael, did a great job, but I'm pleased you're back, Michael.
I have heard some of the feedback about Adam, and it is one of those things, isn't it, like just in radio, you don't take a break. You shouldn't take a break because the person filling in for you will end up doing a better job than you did. So
I must say, my favourite piece of feedback, which of course Adam filled me in on, was a listener saying, "Dear Adam, I don't like all the banter between Michael and Sean. Good on you. Keep it straight. Like your work. Love your work." All right. Okay.
Cool. Thanks for that.
We're bantering already. We better move on.
We better stop. Keep that listener happy. All right. We do have a fair bit coming up today. You've got an interview after the show with John Moorhead from Maple Brown Abbott.
Yeah. So look, we always talk about different ways to invest. We don't talk a lot about investing in emerging markets. So we thought we'd better get an expert in. Now, emerging markets, think of Brazil, Mexico, China, Korea, Taiwan, those sorts of places. So we ask him how to invest, what to think about, the best, we talk about some of his preferred places to invest, but it's a really, really interesting chat because emerging markets is a big part of the global economy and certainly plenty of opportunities there.
Yeah, great one for investors. That's coming up a little bit later on. The main story this morning, though, Sean, a very serious one. The situation in Israel has escalated with fears about the region's largest hospital being attacked while thousands try to flee. Locally, thousands of pro-Palestinian and pro-Israel marchers took to the streets over the weekend with tensions very, very high.
Yeah, look, the situation, certainly in Gaza, is dire. Palestinians seeking refuge at Gaza's largest hospital over the weekend said they were trapped in increasingly horrific conditions, with 2 premature infants dying due to a lack of electricity as heavy fighting raged nearby. The gun battles and intense bombardment around the Al-Shifa hospital came as Israel pressed deep into Gaza City in its offensive aimed at destroying the militant group Hamas in the territory it rules, according to Bloomberg. The World Health Organization said it had lost communication with its contacts at Al-Shifa and said it has grave concern for the safety of those inside the complex, including health workers and patients. The intense fighting between Israel and Hamas has accelerated an exodus of people towards Gaza's south. Tens of thousands of Palestinians are fleeing southwards each day through an evacuation corridor opened by the Israeli military late last week. That's according to the United Nations Humanitarian Affairs Organization. Meanwhile, Iran's president joined dozens of other Arab and Muslim leaders at a summit in Saudi Arabia over the weekend as the Islamic world sought to project unified opposition to Israel's military operations in Gaza.
Yeah, and Sean, locally, Foreign Minister Penny Wong said the Australian government is pushing for a ceasefire in the conflict.
She called on Israel to stop the attacking of hospitals while declaring that how the Jewish homeland defends itself is a matter of key concern. Speaking on the ABC Insiders program, Senator Wong said, "When we affirm Israel's right to defend itself, what we're also saying is Israel must comply and observe with international humanitarian law." Senator Wong said that the Australian government understood Hamas was a terrorist organisation with no respect for international law, but that Israel, as a democracy, needed to be held to higher standards. The comments were made as thousands of pro-Palestinian protesters gathered in Sydney's Hyde Park and in central Melbourne. At the latter, some were waving offensive anti-Jewish placards. There's also a large rally in Brisbane, continuing the weekend trend since the October 7 Hamas terrorist attack. Meanwhile, thousands of people have turned out for the Set Them Free rally in Sydney, where a Jewish Australian leader warned unless anti-Semitism was controlled by all, it will devour once more.
All right, local markets, how do they finish up on Friday?
The S&P ASX 200 had closed down 0.5% to 6,977 points. It was a pretty ugly day all around. The utilities, energy and financial sub-indices all dropped a fair bit, but pretty much all sectors ended the day lower. Some of the more defensive stocks, healthcare, technology, consumer staples, they did best. The banks fell sharply, led by National Australia Bank. The energy giants Woodside and Santos also dropped, as did James Hardie, Origin Energy and Suncorp. The reason? US Federal Reserve Chair Jerome Powell spoke on Thursday night, made it clear that if the world's most important central bank thought there was a need to lift interest rates, it would.
Okay, so what is happening in international markets?
Well, Wall Street closed higher over the weekend, meaning US equities managed to end the week up about 1.3%. That's despite those comments from Fed Chair Powell and other Federal Reserve members. Also over the weekend, Moody's changed its US credit rating to negative from stable, which increases the risk of a downgrade to their AAA credit rating. Eurozone equities were up about 0.5% for the week. Japanese shares did pretty well. They were up a couple of percent. Chinese equities were pretty much flat. Despite the Reserve Bank's hike on Tuesday, the Aussie dollar is still struggling. It drifted lower to about 63 US cents over the weekend. Price of oil is lower, as is gold. Iron ore prices are holding up, though.
All right, we made it through the first part, Sean. I'm surprisingly nervous coming back after 3 weeks. It's
always hard when you've been away, though, because everything's just a little bit unfamiliar.
Yes, yeah, but we're settling in. I'm settling in.
Good.
Yeah, we'll be back in a moment with the rest of the day's business news. Sean, the Reserve Bank released its full gambit of economic forecasts on Friday, and it upped its inflation forecast and definitely left the door open for more interest rate rises.
The central bank's quarterly statement on monetary policy said there was likely to be less progress in bringing down inflation in the quarters ahead, hence last week's 25 basis point rise in the official cash rate. The good news is that inflation expectations remain in line with the inflation target. The bank says another rate rise will depend very much on economic data. It also said that as the pandemic disruptions fade, productivity growth may pick up, reducing the growth of unit labour costs, further easing inflationary pressures. That would be good. The bottom line, inflation is still staying stubbornly high.
Sean, last Tuesday afternoon, sitting on the beach in Fiji, I got a little news alert on my phone saying that the Reserve Bank had increased interest rates. And it was just this encouragement just to not order another cocktail, just to go, you know what?
But did you order another cocktail? I know that was encouragement, but I bet you did order one.
I was able to move on from that. I was able to compartmentalize and deal with that now, deal with the flow-on effect and deal with the aftermath of that now. Because it's easy to kind of dismiss those kind of fears and concerns while you're away on holidays. And then you get home and you look at the bill and you're like, oh, maybe I shouldn't have ordered that extra one. Anyway, but the hike in rates didn't seem to hurt the auction market over the weekend. The preliminary clearance rate holding steady, albeit lower than a few weeks ago.
Nationally, the clearance rate was at 69%, in line with the previous week, according to CoreLogic. Sydney's clearance rate was 70.4%. That was down from nearly 72% the previous week. In Melbourne, it was 67.7%. Now, the week before it was only 60.8%, but of course that was Melbourne Cup affected. There's just a little bit of concern around the place that we aren't going to see a lot more price growth in the market. The pace of growth seems to have peaked. Now, in its statement on Friday, the Reserve Bank said that scheduled mortgage payments, which are interest plus scheduled principal, had increased to around 10% of household disposable income in the September quarter. That's the highest on record. Something to be just a little bit concerned about.
Yeah, certainly is. Now, there's plenty going on in media land, Sean. Seven West Media, backed by billionaire Kerry Stokes, has become the largest shareholder in ASX-listed radio company ARN Media.
The whole radio land is getting very, very interesting, something you're very familiar with, of course, Michael. Over the weekend, Seven West Media bought 19.9% of ARN in an off-market raid. Basically, that's where you buy shares not on market, but you go direct to other shareholders. According to media reports, Seven West spent about $60 million to buy the stake at a premium of around 30% to the last trading price of 84 cents a share. The M&A activity in the sector is getting complicated. ARN, the home of Kiss FM and Pure Gold brands and a network of regional radio stations, last month made a bid for its main rival, Southern Cross Austereo, along with Anchorage Capital Partners. Under that proposal, the bidders would split Southern Cross into two. And then last week, Australian Community Media Executive Chair Anthony Catalano offered to sell his newspapers to Southern Cross in return for a stake in the company. Now we've got Seven West going for ARN Media. Very, very complicated, Michael.
It certainly is, but it's quite exciting as well.
Oh, and particularly for someone like you who knows so many of the characters involved.
It's very exciting. Sean, there's some strife at some of Australia's largest ports, with operator DP World saying it's been hit with a major cybersecurity breach, freezing freight movements in and out of some ports.
Serious story, but don't you love the word strife?
I was actually thinking that. It's got an Alf Stewart kind of feel to it, doesn't it?
Yes. I don't know who Alf... Oh, I do. Home and Away, Alf Stewart.
From Home and Away? I don't know who Alf Stewart is. Goodness me.
If you had said Alf, I would have got it. When you threw the surname in, though, I was a bit thrown.
That's one of the most un-Australian things you've ever said. Actually, it's up there with when you declared that you don't like hot chips. You still don't like them, do you?
No, I don't. DP World. Let's get back onto that. It was forced to cut off the internet to its operations and ports in Sydney, Melbourne, Brisbane and Fremantle. That's after it detected and began responding to a cyber incident. In an update yesterday afternoon, DP World said in collaboration with cybersecurity experts, it had made significant progress in re-establishing landslide freight operations at its ports. Now, Home Affairs Minister Claire O'Neil said that the government was receiving regular briefings and was working with DP World to understand the impact of the incident. Earlier, the intergovernment agency, the National Coordination Mechanism, met to, as its name suggests, coordinate a response. But obviously, we are very aware of cyber hacks and anything that's going to disrupt the economy.
Sean, the bidder for Origin Energy claims carbon emission intensity will be reduced by 80% in the next 7 years if shareholders approve the near $20 billion sale of the electricity and gas utility.
The transition plan, following an earlier commitment from Brookfield to spend between $20 and $30 billion on shifting away from fossil fuel power generation, is part of a presentation given by the investment firm's advisors to large Origin shareholders in an attempt to gain their support. According to the Financial Review, the presentation outlines commitments to the ACCC, which agreed to allow the takeover, despite concerns that it would substantially lessen competition, that Brookfield would set annual development targets for a green build-out plan within 4 months of closing an acquisition of Origin. It would also set annual emissions reduction and emissions intensity targets at that time. The company's largest shareholder, Australian Super, still remains opposed to the deal. The vote takes place in 10 days' time. So there's going to be plenty to talk about over the next week or so.
Yeah, there sure will be. Optus, late last week, began emailing customers offering apologies and an offer of free data to cover for the massive outage last week.
Well, you weren't here last week. You probably knew nothing about it. Do you have an Optus phone?
I don't, no. So it meant that I was able to receive the news alert that told me about it.
As opposed to all those users of Optus. Anyway, Optus offered up to 200 gigabytes of extra data at normal speeds over one billing cycle, estimated to be worth between $0 and about $70, depending on uptake and usage. However, expectations are rising that the company could be hit by costly compensation claims, particularly from its business customers. Meanwhile, online product comparison website Finder said it experienced a 200% spike in traffic on Wednesday, with customers looking for different mobile plans.
Oh, ouch. That's where they would be really hit.
Yeah, absolutely.
Last one, Sean, before we get to international news. Ratings agency Moody's has warned that buy now, pay later companies will struggle to survive as interest rates rise.
Moody's 11-page report on the sector said that even though buy now, pay later transactions were expected to increase, the operating and financing challenges had put independent buy now, pay later businesses on a more precarious footing. Without stemming losses or raising more equity capital, most major buy now, pay later providers risk depleting their equity within the next 2 to 3 years, according to Moody's. Achieving growth targets and profitability will be a formidable task, and Moody's doubt they can maintain cost control. Now, Zipco is the biggest of the listed buy now, pay later providers, apart from Block, which of course owns Afterpay. Zip's share price is down 90% in less than 2 years, so perhaps a few shareholders agree with Moody's.
In international news, early last week, WeWork, the shared office space business, went bankrupt. And then on Wednesday, in over-the-counter trading, its share price jumped 90%, even though it was already bankrupt.
Yeah, so we better start with an explanation here.
Yeah.
So over-the-counter means a broker sells a client's stock directly to another broker. So you don't go to an exchange. It's, a phone call, let's say, maybe an email message these days, and saying, hey, would you want to buy the stock? That's why you can get a value for it. Now, WeWork's value, it topped at about $47 billion, got to about $100 million. You would think that amount will disappear when the company restructures because it's got a debt of like $4 billion or something or other. But speculators have jumped in. They actually want to own the stock. It's kind of a strange strategy, but it's actually becoming less uncommon, buying into a bankrupt company. The most famous example is Hertz. That happens, but it's also happened more recently, mostly through social media memes. So think Revlon, AMC Entertainment, GameStop Corp. They didn't necessarily go bankrupt, but certainly the value of their shares hit very, very low levels. And suddenly you get all these people jumping in, hoping there's going to be some sort of bailout, basically.
Sean, this reminds me, I on the flight on the way to Fiji, I watched a film called Blackberry. Have you seen it?
Yes. When I was on my last flight from the US, I watched Blackberry. It's great.
Isn't it amazing? And that is just an incredible story of a company that just went from boom to bust. And I think, what do they say, that at one point BlackBerry controlled 40% or 45% or thereabouts of the mobile kind of device market. And now it controls 0%.
Yeah.
And I just thought it was a fantastic kind of demonstration of how this company can go from just these tremendous levels of success to nothing.
I thought your kids would have been mucking around by then. So then you actually got through a whole movie without the two of them upsetting you?
Oh, absolutely. Because, you put a screen in front of them. There's a screen in front and the seat in front of them. So, of course, they are going to be entranced by that for the next few hours, especially when you try and limit kind of screen usage a little bit at home. And then all of a sudden go nuts, kids. And, of course, the flight suddenly becomes the highlight of the whole trip, doesn't it? So,
totally.
Anyway, Blackberry, great film. Last one, Sean. The global wellness industry is now worth $5.6 billion. That is up 2/3 in the past 10 years, and that growth is expected to continue.
A new report from the Global Wellness Institute says the sector will be more than 50% bigger by 2027. The research says it's been a surprise how quickly the industry's bounced back from the pandemic. Now, it defined wellness as the active pursuit, I like this, active pursuit of activities, choices, and lifestyles that lead to a state of holistic health. Number one activity, personal care. Think beauty, skincare, hair and nails, that type of thing. Next in line is healthy eating, nutrition and weight loss, then tourism and physical activities like going to the gym. One of the smaller sectors in the Global Wellness Institute report, workplace wellbeing. Something for a bunch of employers to work on, perhaps.
The thing I've missed most about you, Sean, while I've been away is just that way you demonstrate that little bit of skepticism sometimes in. So it's just those little, It's almost impossible for me to imitate it perfectly, but it's just, I've missed it.
Thank you. I'm going to take that as a compliment.
It's certainly, it's intended as one. Now, up next is the Fear and Greed Daily interview. You are speaking with John Moorhead from Maple Brown Abbott.
Yes, all about investing in emerging markets. If you're an investor, if you have a vague inkling about investing, I'd jump on that one. It's an extremely interesting chat with John.
Yeah, and also available today is the new episode of Fear and Greed the Week Ahead with our resident economist, Stephen Koukoulas.
After such a big week last week with interest rate hikes and things like that, Stephen had to take a chill pill for this week, but still plenty going on, especially labour force around wage price index, the labour force stats for last month. So still a really big week, and Stephen's always entertaining to chat to about that.
Yeah, all coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael. Great to have you back.
Thank you. It is wonderful to be back. It is Monday, the 13th of November, 2023. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X and Facebook. I'm Michael Thompson and that was Fear and Greed Business News. Have a great day.